What's up, guys? Cash Flow Cart. We are back with another video, and today we are talking about 7 or 8 stocks you can hold for the long term, guys. As a dividend investor, in a perfect world, when I enter into a stock, I don't want to sell it. Okay, I understand stuff does happen. There's unforeseeable news that comes out, and that's why this game is kind of going to be based on your own personal risk tolerance. And there is going to be some discretion in this game, but I'm going to try to answer the question, what criteria does a company need to meet for me to hold it long term? And then what are those companies? Okay. So I was on Reddit, the dividends thread, and I see this post: 9 companies you can hold long term. This guy said Apple, Costco, P&G, Starbucks, JP Morgan, Microsoft, Nike, John Deere, and S&P Global. Okay, interesting. Obviously, large caps here with good track records. And, someone replied, and this kind of got me thinking, another useless post that tells you nothing. GE was also considered the same way as these companies are now. Someone said GE was it. The ultimate be-all, end-all, be-all, must-have stock until it wasn't. Okay, guys, so, this kind of sparked my interest, and I know I want companies that are going to be around for the long term, that I'm going to be able to hold in my portfolio for years to come. But, what is the main factor that determines that? Okay, and what are those companies for me? We're going to cover something very important today, and that is, it's a pretty simple binary thing. If a company has a wide economic moat, okay, for me, that's my criteria. So let's get into what is a wide economic moat. So, I go on here to Investopedia. Investopedia is good for like simple questions, like, I guess, not theoretical, broad topics, I guess. And a wide economic moat is a sustainable competitive advantage possessed by a business that makes it difficult for rivals to wear down its market share. Okay, so right here with this definition, now we have kind of a basic understanding of what is a wide economic moat. And, companies that I want in the portfolio long term, I do want them to have that wide economic moat. For me, I typically like to think of it as this: is a company going to be able to generate, free cash flow and bottom line 20 years into the future? Okay. None of us have some crystal ball where we're going to be able to tell what's going to happen, 30, 40 years from now. But the foreseeable future to me is kind of on a 20-year time horizon. We should note here, it was popularized by Warren Buffett, obviously the dividend investing GOAT. But let's dig a little deeper, guys. The company can get their economic moat from different sources. Okay, so kind of what we're going to do today is we're going to go over, my 8 holdings for the long term, and we're going to try to see, okay, where does this economic moat come from? Okay, so, just to kind of get an idea of some of the things that provide a wide economic moat, a company is able to maintain low operating expenses in relation to sales. So cost advantages, okay? They can essentially undercut competition. Here it gives Walmart as an example, okay? Walmart has the scale to undercut other retailers, smaller retailers, just because of the scale they operate. They can offer the lowest prices, and that gives them an economic moat. What else, guys? Intangible assets. Okay, we saw the first example. The guy mentioned Nike. Okay, the Nike swoosh, whatever you want to call it. It's not a tangible asset. However, it is very valuable to their brand. Nike's brand image is what gives them that economic moat, right? Their deals with Michael Jordan, other athletes, their years of performance and their brand image gives them the moat. What else? Efficient scale. When a particular market is best served by a limited number of companies, guys, we talk about it on this channel sometimes. Altria, okay? Altria is a near monopoly status in terms of cigarette production and sales in the US, okay? So they get their moat just because it is more efficient for the cigarette market to be controlled by, one big player, okay? There's a lot of regulations. It's not a market that really, has low barrier to entry. It's a very difficult, market to scale. So with that in mind, it really makes sense that Altria is kind of that, key player. Switching cost, that's another thing. I don't want to give away all my examples here before I even show my holdings, but switching cost. So, if it's more expensive for a consumer to go somewhere else, it's almost just becomes not worth it to them, right, guys? I mean, just for a broad example, like your phone service provider, when was the last time you switched, your phone service network provider? Maybe you have, but more than likely you haven't switched that in quite some time. Excuse me. I have Verizon, and it's what my parents had. It's what I've always had. Probably in the future, I'll just stick with Verizon unless there's some drastic change. And I think that kind of gives us a good idea of what is an economic moat and where companies can derive this economic moat, guys. And again, that wide economic moat is going to be what allows a company to be considered a long-term hold, okay? We get into a lot of metrics today, or we get into a lot of metrics on this channel, but, I think economic moats are often overlooked because it's kind of a yes or no thing, guys. It's not like we can see some trend, we can see some data that confirms it. It's, does this company have a wide economic moat or does it not, right? All right, so let's go over the positions. Last month, I did a video about building my positions in different stocks, and we're kind of going to do this one similar. I'm going to pull through each position. We're going to look at it real briefly, and then, we're going to talk about, okay, where does this economic moat come from, right, guys? So we'll show trades, see if that pops up. Sometimes it's a little touchy. Okay, now it is showing the trades. So, I'm not going to spend too much time talking about my own portfolio, but, I'll mention it and we'll try to cruise through these. All right, first holding, we've got Apple. I've got 63 shares at an average price of $117 a share. All right, guys, where does Apple's economic moat come from? And why is Apple, a good long-term hold? Again, in my opinion, this is my portfolio. These are my holdings. Okay, so Apple's economic moat is going to come from consumer preferences, brand image, and brand loyalty, guys, right? If you have an iPhone, you've probably had an iPhone before it, and an iPhone before that. There is a switching cost, not only, in the sense of monetary, but also in the sense of if you get a different phone, you're going to have to learn how to use it, okay? You're going to have to learn the differences and the nuances between that technology, and it almost becomes not worth it. So, brand image and switching cost kind of put Apple, in my mind, of, one of the companies with the widest economic moats that we can see in today's market. Next up, we got another heavy hitter, and I think you guys are going to kind of start to catch on to what we're doing here. We got Coke. This is a small position for me. I said the trades are being a little spastic. Well, ideally the trades would show, but that's okay. I have 7 shares of Coke at an average price of $56.67. Since the trades aren't showing up, guys, I tried to catch this dip down to 52. I was a little late on the trigger. kind of got in on the way up, and I've only built a small position in Coke, but it's one I'll build hopefully at opportune times down the road. So where does Coke's economic moat come from, guys? Again, consumer preferences and scale, okay? Coke can undercut other companies because of the scale and size of their operations, right, guys? So you've got consumer preferences and brand loyalty, and then you've also just got, sheer size. Okay. Coke is obviously the largest beverage industry, that there is, and they're focused solely on beverages and soft drinks. I mean, some alcohol and stuff. But, we've also talked about Pepsi too. They have a moat in their own right, but their portfolio is a little more diversified. Okay. And because Coke is so focused kind of on their niche, it allows them to just, scale the crap out of it, have great, impressive margins and kind of maintain that economic moat that, Warren Buffett's probably talked about it 1,000 times over his career. I love Coke stock. The only thing that holds me back on this one from having kind of a better, bigger position built out, I think, is valuation. With a company like this, it's going to trade at a premium. It's going to be tough sometimes to identify, okay, this is a great opportunity. I mean, we can even see when it has dipped just in recent years. Here's COVID. It recovered like weeks later. This one doesn't really stay down is the best way I can put that. Let's move on. Next up, we got Altria, guys. And, we already talked about this one briefly. I'm bummed about these trades. We talked about this one briefly when we were going over kind of sources and definitions. But Altria's economic moat, guys, again, it's going to come from, in the industry Altria is in, it's beneficial and it's more efficient for, a winner takes all type of thing, guys, right? There's so much regulation, legislation risk around like cigarettes or any type of sin stock. So with that in mind, there's competitors basically cannot legally interfere with Altria sales, guys, right? I mean, this is a business that takes a long time to build. It takes a lot of relationships, and, their economic moat comes from the fact that, a cigarette manufacturer in one country is, it's more efficient for it to be kind of a winner takes all environment. So Altria does have that economic moat. You can see I have 250 shares. I just spoke on that in the portfolio update. 250 shares at $44 average. In terms of share price appreciation, I am down just over 1,000 right now, guys. I want to be real. I want to be raw. I'm not only going to show you guys my holdings on this channel, I'm going to show you my cost basis. I'm going to show you, when I entered. I'm going to my goal is to show you, okay, I'm building a dividend portfolio for the long term. I've been doing this. This is what it looks like, guys. So, that was a bit of a tangent. Let's get back to Altria. So, yeah, I don't want to spend too much time on the technicals today just because we're talking about long-term holds and what causes a company to be a long-term hold. But here's Altria. Let's move on. Microsoft continues to blow my mind, guys. I made a video literally as I'm filming this. Microsoft is trading at $404.63, and the all-time high is $404.79. So it's like, I mean, profit loss today, I'm up over $100. My open profit on this one is $3,200. It blows my mind. And if you guys don't know, Microsoft has overtaken Apple as the highest market cap company. So, that's pretty crazy. I don't know if I saw that coming, but here we are. So, Microsoft, a very similar type of moat to Apple. Comes from technology, consumer preferences, and scale, guys. I mean, if you use Windows or if you use any Microsoft products, you're probably not going anywhere. Okay. Even like, I know there was a lot of talk about Google's cloud based services kind of replacing the Microsoft Office suite. And, people use Google's cloud based services, Docs, slides. People definitely use those. However, Microsoft, their software is so far ahead of the game. Um, it's really on another tier than these guys. And that creates, okay, people prefer Microsoft, okay? Consumer preferences. And again, we'll talk about switching cost on this one too. I mean, I mentioned it on Apple, but it's not just monetary, okay? If you go to college and you have a Windows computer and you learn Excel, okay? You're using Excel in the real world, okay? I mean, this is not, oh my God, they just hit a new high. This one has been like my most rewarding in terms of share price appreciation. I mean, my average price on it's 243, and this week it broke 400 for the first time ever. This is pretty crazy. It's literally at the high on this 1 minute candle as I'm filming this video. So, I mean, again, a lot of distracting stuff in the market, guys. But, me personally, I am not buying more Microsoft right now. I'm just enjoying my cost basis, and I'm enjoying Microsoft for the long term. Can I do the thumbs up? It has that wide economic moat that we want to see. Now I look dumb. It's supposed to make a thumbs up. Whatever. Next up, I'm excited about this next one. This is a good example. And I don't know if I'm going to call this video like 7 stocks or 8 stocks for the long term, because Realty Income does not technically have that wide economic moat that I want to see, guys. So Realty Income, they have, single properties. They rent out using triple net lease agreements, and their tenants are other companies like Dollar General. What are some other ones? Really like lower cost basis retail type companies. They've got some restaurants, stuff like that. We'll do a full video on Realty Income, but they don't have an economic moat because there's really not a barrier to entry into this industry. So, if someone with a high net worth wanted to compete with Realty Income, they could buy, a warehouse, an office space, retail location, probably that retail location, and they could essentially compete with Realty Income. Okay. So because of that low barrier to entry, Realty Income does not have that economic moat. Okay. That wide economic moat. However, for me, I do feel comfortable holding it in my portfolio. And the way I look at it is, so their lease agreements with obviously these other companies, this is B2B, their lease agreements expire in different years, well into the future, all the way through like 2043 right now, right, guys? So, if 5%, 4%, 3%, 6% of their lease agreements are expiring year after year, to me, that's kind of what I view as, okay, they have those long-term prospects just because, year after year, there's not like risk that, all their tenants could just cancel their lease. And, and what happens most of the time, guys, is when these lease agreements are expiring, most of these tenants, if business is well, most of these tenants are going to re-sign that lease agreement. But, we had to include this because it is one of my holdings, but I think it brings up a good point. You can really like a company, but if it doesn't have that wide economic moat, you have to ask yourself, okay, does this fit my risk tolerance? Am I comfortable holding this one, even though, it is low barrier to entry? People could compete with this guy. So again, the trades are being dumb. I have 215 shares, price of $65. I actually wish I could show you the trades on this one because I think I started getting in it in mid to late 2022. Don't want to make this video too lengthy, but yeah, you can see here, guys, I was a little quick on the trigger on this one, and I've spoke on it before in other videos, but I built out, roughly half of this position right off the bat at $67. And, with that in mind, it's caused me to struggle to get like an attractive cost basis and to lock in more of an attractive starting yield. We're not going to spend all day on Realty Income. I need to dive into it and make an entire video about it, but let's move on. Pfizer, guys. Where does Pfizer's wide economic moat come from? It comes from patents. It comes from their products, from medicine that people need, right, guys? So with that in mind, if Pfizer has a drug, that is necessary, for people's health, I guess that's a pretty obvious wide economic moat. But on the other side of that coin, guys, it is capital intensive in the sense that, okay, they do have to continue to develop drugs. Research and development for anyone like Pfizer, who is just a straight drug manufacturer, is going to be a big expense. And it's kind of a crucial thing. It's not like they can just pour the money in and it works out. They have to develop successful and good drugs. It's capital intensive, and, they need great minds, but it does have that wide economic moat because these drugs are obviously necessary for some people. Let's make one note of this though. When a drug gets, the go ahead from the FDA, for lack of a better term, the company who created that drug gets a patent on it for 20 years, right, guys? So they have a 20-year window where they can sell that drug to the market. After that patent expires, right, you can have the generic guys, okay? So, CVS, whatever, Target, they can come in and they can make basically the same drug and sell it, under their brand name. They can undercut the price, and then Pfizer would have to lower the price of their, name brand drug. So in order to sustain the moat at something like Pfizer, you are going to have that continual research and development. But, they've been doing it for a long time. Hopefully they can continue to do that down the line. Next up, this one gets talked about on YouTube 24/7, I feel like. Starbucks, end of 2023 and then through this year so far, Starbucks has been on a slight pullback. I think that's a lot of like labor union fears and some drama that Starbucks, withheld pay from certain workers because they were, supporting a union. I don't like to get into the drama with these companies, guys. I like to get into the metrics and the numbers. I mean, obviously you can read the news, but don't let the news, take your attention off, okay, what's happening on the income statement, guys. Okay, another tangent. I'm on lots of tangents today. Where does where does Starbucks get their wide economic moat? Again, brand loyalty, intangible assets, and consumer preferences. There's a channel here on YouTube called Everything Money, and I've seen a few of their videos. And he says, I don't know his name, but like the main guy says that Starbucks is, the biggest legal drug dealer or something. And, I think that's kind of a funny way to think about it. A company like Starbucks, their moat is so wide that people are legitimately addicted to their products. All right. They're addicted to the caffeine, the taste, the status. And, with all that in mind, Starbucks has this wide economic moat. Okay. I don't want to go overboard and say that, something couldn't happen where people wanted to boycott Starbucks. You know, trendier type companies like this are always at risk for, like, I don't know, just social or PR disasters. However, I am in Starbucks for the long term, and I'm proud to be a shareholder. I'm probably going to hold off on building my position. I have 62 shares at an average price of $82. Again, I'm happy with the position I've built out. If Starbucks falls through 2024 and I can get this, in the $70 to $85 range, I'll probably be interested in bulking up this position, but we'll just have to wait and see. It's getting lengthy. If you guys are with me, thank you. I know this has been kind of a long video. Last up, though, we're going to wrap this up, I promise. T. Rowe Price, and I actually have a whole nother video talking about this, but I have 8 shares long, average price of $101. Oh my God, it's running. It's over at 110 now. I wish it would stay. I was really hoping it would kind of stay under 100. It kind of faked me out with this little dip. Whatever. I'm bitter. Anyway, let's not get sidetracked. T. Rowe Price, this is a great example. Where does their wide economic moat come from, guys? It comes from switching cost, okay? So if people have their retirement dollars in T. Rowe Price, and I do feel like a broken record saying it, but I'm going to say it again. If people have their retirement dollars in T. Rowe Price, it is very unlikely that they're going to, make some drastic switch with their retirement money. A lot of people, I'd say the average American who is saving for retirement, they want it to be a very passive thing, a thing they don't have to stress about. They've got enough stresses in their everyday life, right, guys? I mean, the last thing they want to do is get home from working 40, 50 hours in a week and think, oh, now I need to figure out what the best thing I can do right now this week with my retirement money. Heck no, guys. They don't want to do that. So that wide economic moat comes from switching costs. Their money's there, and it's most likely it's going to stay there until they do reach that retirement age. They start taking those RMDs. And, again, we've talked about this too, but that's going to lead to some of the lumpiness of T. Rowe's net income is going to just be the age demographics. All right, guys, this video was a little bit all over the place, but the main thing I wanted you guys to take from this today is for a company to have, the prospects to be a long-term holding, for me, it's got to have that wide economic moat. All right. That's how I would define, okay, do I want to hold this for the long term? If you've made it this far with me, I appreciate you guys. And if you're subscribed, I appreciate you, even more, I guess. Thank you guys so much. Have a great rest of your day. And, let's continue to build wealth this year, guys. Take care.